Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me. And so in this video, I am going to be going over my weekly trading plan for the week coming up on Monday, July 29th. And so I'm recording this on Sunday, July 28th. Typically, I have these videos out, or I plan to have them out on Saturdays, but I just fell a little bit behind this week. And so for this video, I am going to be going over this list of stocks, talking about covered calls, cash secured puts, and buy and sell levels. So I do think it should be pretty interesting. This is going to be available for members up until Friday next week, and then it will be made available to the public after the market closes. And so if you do want to have access to this video as I release it before the market opens on the Monday for the weekly trading plan, memberships are only 99 cents a month. I do have this second level where it's $1.99 a month, but really all you need is the 99-cent a month payment to get access to this before everyone else. And so the perks that you do get with a membership include priority replies to comments. And so I know that you're a member because I see a loyalty badge there. And so I will respond to the comment ASAP, whether that's directly via the comment or by making a video based on your response. And that's effectively what I'm doing right now because a member did comment on the weekly update, and so I'm responding to that with this video. Other things besides the comments, early access to new videos. So that is going to be early access to the weekly trading plan. You get the trading plan before the week starts. If you're not a member, you get it after the week is over, and so that's fine. You can wait for it. The video from last week has actually performed better than I expected since it was a little bit outdated, but the levels are still valid. So, I think that's cool, but I think that, 99 cents a month, I do think it is worth it, trying to add value for members. And then other things that I'm going to kind of continue to experiment with, members only live chats. I'm probably going to be doing some additional evening live streams, looking into unusual whales, options, calls, flows, stuff like that, just getting more familiar with that platform and that tool. And so I think that could be really cool, but I might limit it to members only just so I can focus on, diving into a specific number, a specific list of stocks, and look at the options flow there. And then I might do shorts periodically if I want to update members. And I haven't done this yet, but I think member shoutouts, that's a pretty cool thing. And then the next level up for the A+ level, members only videos. And so that's basically what I did last week for the weekly trading plan, but now I'm switching over to do early access. So, occasionally I might do some members only videos, but, really it's a benefit for me to make the videos open to the public. So I might not do this too often. So, you can do $1.99 a month, and that extra dollar really just goes to support the channel, support my efforts. You really do get all of the benefits with 99 cents a month. So I would encourage becoming a member, and then you get the perks of getting to see my thoughts on all these stocks every week, and other benefits like members only live chat, priority reply to comments. So I think that you should become members. But before I get carried away with that, I am going to dive into the charts here and talk about the levels that are basically outlined in that table that I just showed. But first, I am going to start with American Airlines, ticker symbol AAL. That is not on the list here because this is a call that I bought a while ago when there was this big gap down. I talked about it last week. I didn't view that price would be going down to $10 a share, but actually on Thursday we saw a dip on the 25th going down to, let's see, a low of 976, as you can see there. And, so it wasn't the best call for me to have bought here because it's just bled down, and I think I was just early. And that's part of the reason why I do want to explore unusual whales. I'll be getting a membership for, or a subscription, I should say, I think, for the month of August, because I shouldn't just be placing orders for options strictly based on, oh, there's a gap and I don't think it's going to go below 10. I think price is going to go up. There needs to be some flow data backing that. And so, this for me was a lesson in, this mistake. And I can actually draw a trend channel coming down from this gap down up to current price. And so, price has been residing in this downtrending channel. I do think it will break to the upside, but at this point with my call, I've just been, kind of wasting money on premium. I do think it will close in the money coming up on the 2nd, so this coming Friday. I'm not going to roll it again, and I'm just going to take whatever premium is left over. So right now, if it were to close at 10.62, that premium would be about $62. And so I'll gladly take that, but I put more money into it than $62. So this was a good lesson in don't just pounce on something because if I switch over to the monthly time frame, because this level, this uptrend is being retested. If we look at the monthly time frame, we may very well end the month of July back at that trend line. That would put price at right around 11.34. So that would put my contract premium at around $134. So I'd get some money back, but not as much as I had put into it. And this to me is really just an example of I bought the dip a little too early. So, good to, I should have put American Airlines on my radar. I don't think it's going to go down to 10, but if it does, that's a great dip buy, either for a call or for some shares. And I personally don't want to buy 100 shares of this at $10 a share. It's $1,000. I'm just not that interested in it. But, I did want to share that I will likely be not exercising, but selling this call at some point, which might be on Friday. And the reason why I don't want to sell it now or Monday, Tuesday, or Wednesday this week is I keep track of my gains, my losses and gains on a monthly time scale, and I don't want my July month to go any lower, and so I'm going to wait until either the 1st or the 2nd to sell this call and to take whatever premium is there. Hopefully, it's over $100, but it might not be, and that's fine. I learned from this, and but yeah, I'd rather have that reflected in my August budget because I do expect to make more in August to bring that number back up. I'd rather in July not go down anymore. And so, yeah, those are my thoughts on American Airlines. So hopefully that's helpful. It's not really too interesting of one, but I do think that we just saw a great dip buying opportunity. I do think that this will be recovering, but it did break this, on the monthly time scale, this downtrend. If we do close basically below $11 a share, 11.22 is where that blue line is. We want to close above 11.22 at least. Now, that would be the first close below that uptrend. And so that could be, a bad sign that this is going to break and, go much lower, maybe coming back down to, actually, that's 141. So I don't know that it'd be going back to there. That was the low hit on the end of July for 2008. So following the financial market crash back then. And so those are my thoughts on American Airlines. Hopefully that was helpful. I'm going to switch back to the daily. And now I'm going to talk a little bit about AMC, ticker symbol AMC. Got a lot of stuff drawn up here. I will be doing a video on AMC referring to a bottleneck that I'm pretty interested in. So I probably won't talk about AMC too much in this, but effectively that bottleneck that I, really just had this thought a couple days ago when, the price squeezed up to, a high during market hours of 11.88. That was on May 14th. The options in the options table went from, the max being around $10 a share for a strike going up to, $22 for a strike. But then if we look at the options table now, we can see, up here, this is all calls. All of the options are displayed on the table. The highest call option, the strike, for August 2nd is $10.50. And so just a couple weeks ago, it was $22 for a strike. This is the weekly, so maybe if I switch over to the monthly, yeah, it's actually just $9 a share. So I kind of view this as a bottleneck in that really, when you have call options on the table that are, let's see, looking at this again for August 2nd expiration, just going up to $10.50. There aren't too many options in the table here, but when it squeezes up, you have them going up all the way up to $22 a share, right around there. And so you've got like basically double the amount of call options that are out of the money. And so then retail can then, place bullish bets on AMC going up, but then it's diluted over more strike prices. And so because of that, it's less likely that those call options would be closing in the money. But now with the maximum strike price being $10.50 for this week, $9.50 for next week, and for August 16th for the monthly contracts, $9 for that strike. And let's look at August 23rd, $9.50 again. It's getting much closer to the current price. And so if price does squeeze up again, then that would push those call options to go up to 22 or whatever number dollar shares. That would then dilute it again. But now it's kind of being concentrated, so it's more and more likely that these call options would be closing in the money. And so if we look at August 2nd and we look at the open interest, we can see that price above $5 a share for Friday. It's great that it closed above that level. But if we look at this, we can see that $5, 9,000 contracts are in the money. $5.50 and $6, we got 13,000, a little bit over for the $5.50 and $6 strike. And so if price does start to move above those levels, that's more contracts moving in the money. That could start a gamma squeeze or a gamma ladder, I believe is what it's referred to as. And, price can just start to kind of stair step up or, ladder up. It's a gamma ramp. That's what it is. And so with that, if price does start to go up, you got a lot more contracts closing in the money. That's bullish. And then price could start to go higher. And then if we see price go up to, it doesn't have to close the week, but if we see price go up to above 1050, then we've got, 17,000 contracts and all these other ones here in the money at that point. That would then expand the options table and then kind of dilute that opportunity for, those contracts to close in the money. And, I could just see that over the next few weeks, if price does start to go up, we will see the options table start to expand, and that will serve to kind of put a cap on any violent up moves. And we haven't seen that yet. So I think that this is definitely something to be paying attention to. And since I do sell covered calls, 1050 is above my average. But if we look at the following week, 950 is not above my average. So I have no interest in selling covered calls with a 950 strike. And the reason for that is because I've been forced out of positions below my average doing this. And so I don't want to do that now. I don't want to be selling my shares. And if I do end up selling them by being forced out of a position through covered calls closing in the money, I would want that strike price to be above my average. And for next week, the week closing on the 9th, so the following week, and then the monthly contracts, and really all the contracts moving forward, they're below my average, that maximum strike. So, I start getting into this position of, I want to make money on the shares that I have, but I don't want to be risking them closing in the money below my average. And so what I found in the past is that ends up being a time right before we see some moves to the upside, which I think could correspond with the monthly contracts for the 16th. And so if we look at the open interest, we can see that for the $5 strike, you got about 3,000 contracts in the money, and not a ton up here, but if we start to see price moving up, we could definitely see these numbers going up as well, and then those would be in the money. So I think that's great. Looking at the 9th, 2,000 contracts here, so nothing too crazy. And then again, looking at the 2nd, 9,000 here for 5. So I do think that over the course of the month of August, thinking about the weeks leading up to the August 16th monthly expiration, I do think we could be seeing another violent move to the upside, but I do think that will then be followed by a pullback. So good to consider that. But that pullback, I think we've seen all of this consolidation here, 570 to 6. I think the new floor could be around there if we do move up. Or, it could be, at 960 or right around $10. Who knows? And that, as of right now, is, 2x current price. So I think it looks pretty good. But anyways, I'm going to chat about, this table that I have here and going over what I did last week. That's in gray on the left, and then what I plan on doing for this coming week. So both with covered calls and then additions, shares that I either did buy or plan to buy this coming week. And so just looking at AMC, I did sell a number of covered calls. Some of them, did expire last Friday on the 26th. So I was able to make some premium from those, only, $3 from those in total here, but that's not nothing. That is something. And from in total selling these covered calls, I did make a total of $42.71. So, that might not be a lot, but, it's notable. It's a lot for me. So I'm happy with that. Hopefully none of them close in the money because I like to hold on to the shares, but all of the strikes are above my averages, so I think that's great. Moving into this coming week, we do have, August 8th, that is this coming Friday. I have sold a number of calls with just the $10.50 strike for AMC. I don't want to be selling my shares at that price, but my average is below that. So if I am forced to trim, I don't think that's such a bad thing because I did collect from those contracts that are closing this coming Friday. I did collect a total of, $5, $6, $7, $8, $9 from those. So that again is not nothing. And if I am forced out of, 100 shares, or I guess this would be 300 shares, I still have a ton of shares. So I'm not too worried about that. I also, though, don't think that AMC will be running up to 1050 this week. I don't think that will happen next week, but I do think it could be happening the following week. So I would start to then be cautious with that. And so for this coming week, I just have one order placed for an AMC covered call with a strike of $10.50. Limit is 2 cents, so I get $2 for that. And then I have a number of other shares, but I'm probably just going to do it on a daily basis, evaluating what the price is. And then I will be considering this, this call basically with this strike, $10.50. If I can't make $2 from it, I'm probably just going to chill out because AMC does have earnings on Friday. Deadpool and Wolverine just came out, and then there are going to be more concerts being announced. So I think there's a lot of bullish stuff going on with AMC. They also extended their debt. That's due back in 2029 and 2030. So, I think a lot of things are looking much better for the company, although it would be better if they had no debt. But, it is the reality that we've got to deal with. So I'm just going to continue to sell covered calls above my average and, continue to add. But because I own so many shares of AMC, I'm only going to be doing it incrementally, one share per day if the limit order is filled on that kind of basis. And so with AMC, my limit price is $5.03. And so if I flip back over to the chart here, why did I pick $5.03? That's just because, we did get this pullback to the 786. That's what I was expecting. $4.63. And so if actually, part of these weekly plans is I want to be looking back at the week before, see how I did. And so I had this limit at 469. That was filled, and then I continued to add more on days. Every day it was below my average. So I just add another share effectively at the closing price, but at 469. Why did I pick that level? And so this, let's see, what day was, the 19th was last Friday. So that was the last day right here that I had to look at this. And I just saw, the 786 is down there at 463. Maybe that it wicks, maybe it doesn't get down to that level exactly. And so, I'll settle on 469, also just having fun with that number. I could have, set it lower. The low on the 24th was, $4.54. So I could have gotten that share cheaper, but it's just one share. It's not a big deal. And I was happy to buy, even at the close on this day, which was at a price of $5.14. Not exactly what I did the one share buy at because there might have been a dip in after hours. But yeah, it does look like in the chart here that we could be putting in a top with that big wick up. It's a spinning top effectively. And so I could see price coming back down, but maybe finding support around this uptrend. And so if I think that price could be coming down to here, that would be, around $4.70, right around 469. Why would I want to buy another share at $5.03? Well, that's just because, the number of shares that I have is not divisible by 100. So I'm happy to just buy every day when as price is lower than my average, just to be getting my average down slowly over time. Things take longer than we expect. So, while it's not that exciting, I am just building my position more one share every day at a time. And, if it does come down to 463 again, down to this level, I then look to add more aggressively. Or if it does come down to 503 on Monday, pick up a share then. If it comes down to the golden pocket here, pick up another share or 2 or 3 there. And and so I'll just continue to add. And with earnings coming up on the 2nd, I could see there being a pullback to the golden pocket around 482 to 486.5, and that being a bottom before it really takes off over the weekend. So earnings are reported Friday after hours, kind of unusual for earnings to be reported on a Friday after hours. Or at least that's when the earnings calls, I should say, because they did give a preview of their earnings. And I think that it could take off over the weekend. So I want to be accumulating more and more, but just not too aggressively. And so that's why I have a buy order at 503, and then I'll likely add to that at these lower levels. But you guys all know that I'm, bullish on AMC, and I'm just stacking as much as I can, but also kind of hedging that by selling covered calls, which, I know a lot of people may not like that I'm doing that because that is, bearish effectively, but it's just a way for me to manage my risk, and so that I can be buying more aggressively or, just consistently when price is below my average, because I will be trimming when it goes above my average, but still holding way more shares than I ever anticipated holding when I first got into AMC. And so, I'm going to be here for the long term, but I do have to be managing risk. And so that is how I'm doing it. And so the next one on my holding list is Biora Therapeutics, ticker symbol BIOR. This is one that's, not really too exciting for how I'm trading it. I am just effectively selling covered calls. My average is I believe slightly below $2 a share. And so, price is well below my average. So it's kind of, disappointing. And so what I do with Biora, as you can see last week, I place a bunch of orders. White means that they were not filled. I should mention that. Didn't mention that with AMC up here. This one was not filled. Black means that they were filled. And so with these Biora ones, virtually all of them were not filled, which does suck, but it's just a way for me to, I'd rather sell covered calls with a strike of $4 a share that expire with the expiration of August 16th. That's coming up here, because then, I make the most from that, have the most security of that, of being able to hold on to those shares. But I also want these orders to be filled so I can be making money on premium. And so the only one that was filled was this one here. That's a $2 strike for October 18th. So a little over 2 months from now, about 2.5 months. Pick up $5 from that. So it's a nice little addition there for me, a nice little bit of money to add to this 42.71 down here. But I'd much rather not sell my shares at $2 per share. But, that it is above my average. I have tons of shares, so, I'm fine doing that. And so the one thing that I adjusted for this coming week is I omitted one of them because this is effectively the number of shares that I have. This times, 100 times, all of these, whatever, 900 or something shares left that I can sell short, as a covered call. And so with Biora over here, the one that I omitted was the $4 strike expiring on August 16th. So I did, as you can see here, I omitted that here. And the reason for that is so I can sell another covered call with a $2 strike that expires in October. And so that will likely be filled at market open on Monday. So I pick up $5 and, I might be selling my shares much lower than the price if it's well above $2 a share in October. But if not, it's just a nice way to be making a little bit of money on those shares that I have. So nothing too exciting with Biora. I am not planning on buying any more shares. or doing any more cash secured puts with them. I eventually will, but for the time being, I'm not doing that. And so, yeah, looking at the chart here, it did pull down to the golden pocket here, bounced up here, really coming back to that full, well, I guess not full retracement, because that would be down here, but getting back up to that high at 79 cents that was hit on, let's see, the 17th. Then we have since pulled back, but to the 50% retracement. And so I could actually see it, maybe the next dip buy is around 67 cents. But for me, that's, like I said, well below my average, and current price is below that now. I'm just hanging out, selling covered calls, not doing anything too crazy with Biora. So yeah, I just wanted to share that. And now I'm going to flip back over to the list here. And the next one that I want to talk about is BOIL. So this is 2x leveraged natural gas, ticker symbol BOIL. And so I did pick up a share of this last week. It did dip below $10 a share, and I thought, I'll pick up a share at $9.90 if it does pull back to that level. It ended up doing that, closing below $9.90. So as noted over here, let's see, I've got BOIL right here, $9.90 in black. That did fill. And so my next buy level for BOIL, looking over here, that's just going to be $9 a share. So part of the reason for that is, with current price being below my average, I could get my average down and, pick up a share. And I have to say that I kind of regret not setting my buy order at $9.69, just having fun with it. And then, now current price wouldn't be much lower than my average, because it's good to have fun, when doing this stuff. But, my average is $9.90. It's just one share, not a big deal. But I have found with natural gas, with BOIL, if I, am not patient, it's just going to continue to bleed. And so while the low is 943, closed at 945, could get my average down, I suspect price could be going lower in the coming week. And, while it's probably better for me to be looking at the natural gas chart, which I will do in 1 second, looking at this chart here, the BOIL chart, I did draw this downtrend, and that could coincide with a price right around $9 a share. So maybe it does find support there, and then I'll pick up a share at $9. So I'm going to be patient for that because I don't want this BOIL position to just be, a theta decay, time decay, opportunity cost lost. Or having a high opportunity cost by establishing a position here with that money being able to be somewhere else. It's only $9.90 right now, but I'm just setting aside $9 to pick up one more share. Maybe there's a bounce there, and then maybe I can trim for 10% profit. Again, not too exciting, but it's something. And I find natural gas to be pretty interesting, so I am going to flip over to my natural gas charts here, and just because while I'm talking about BOIL, I've given kind of my thesis on that. But then looking at these other ones, they are in red, or I guess I should say this other one, KOLD, KOLD, that is the 2x leverage short natural gas. And so my buy price for that, this is in red, so I don't have it placed. I don't plan on buying it, but my buy price would be around $54 a share. And the reason why I have that drawn up there, $54. I believe that corresponds with the top here. Yeah, it's right around 54. Here the cursor's at like 53.76. So I would look for that peak to then be acting as support. So that is when I would want to add to it, but maybe it doesn't get down that low. And that would be, with it being bullish or moving in the favor of the bulls of this to pull back to that level. So, I think it could be going, this could be going lower, meaning that natural gas could be going higher. And so, yeah, I'd say $54 for that. UNG, this is United States natural gas. I feel like, I'm just not too, I don't find it too exciting. And also with this share price being higher than BOIL, I'll just do BOIL and see where that takes me. And then if we do look over here at the natural gas chart that I have pulled up here, it does look like, it's potentially gotten to, oh man, sorry. I don't pay for trading views, so it's always popping up with those ads. But yeah, I've got this trend line that we can see here. Let's see, where are those pivot points? I guess they're not really highlighted on there. Oh, yep, yeah, so those are the two pivot points. It does look like we have pulled back to that. Maybe we see a bounce that also does correspond with the golden pocket here that is based on this retracement that I've drawn, effectively from, the low here up to the high, golden pocket there. So maybe we see a bounce, but it could also break lower, like to the 786. That would be around 186. And so, yeah, I mean, I could see natural gas coming lower, and so that is why I'm not going to be too aggressive with my Boyle position. I'm just going to wait for $9 to fill, or, I'm just going to leave that money on the side. So again, nothing too exciting, but I just find natural gas interesting, and so, I wanted to participate in that. But now I'm going to move on to the next one on the list here, which is ChargePoint, ticker symbol CHPT. I've got this nice little doodle drawn here. That would be, my thesis if it came down to the 786. Doesn't look like that's playing out. And, I could see this going, I could see it going either way. I could see it going to 250 or higher. Looks like we got the high of 244 on July 17th, but I could also see this purple uptrend that we have here, that kind of acting, as resistance right now. Maybe we're seeing a spinning top here, and we do see price pull back some. And so with that being said, what is what are the levels that I have highlighted? Oops, in my little spreadsheet screenshot over here. And so my buy price for ChargePoint, 203. Last week I had it at 186, and that did not get filled, but I did accumulate, approximately 1 share a day, just given that it was below my average, which as of right now, I think it's right around 236. A little bit below 250, so that's going to be reflected in the covered calls that I'll go over in just a second. But I did want to go over this. So 186 last week not getting filled, and this week 203. So why did I pick those levels? So 186, I was thinking a bounce to the 50% level of this retracement, and that also corresponding with this downtrend that I have drawn there. So we did not get that. And so I could see 186 happening this week. We do get a rejection, and it pulls back to that level. And I'm actually just going to delete my doodles here because I don't really find them to be that useful at this point. But yeah, I could see this getting, it's not getting to that higher high. I could see this getting rejected from there, pulling back to 186. And this week, that would likely be filled. But for me, with my position, my average being just above, a little bit above current price, or the closing price, I should say, at 219, I would be happy to be adding more, because this is one of my positions that I don't have a position that's divisible by 100 at this point. I have over 1,000 shares, but it's it's not divisible by 100. So I'm just trying to slowly accumulate more shares while it's below my average, but I don't want to do that too aggressively because I just have so many shares of it. So I'm not too I don't want to concentrate myself too much in ChargePoint. I'd rather build up other positions rather than be super aggressive with ChargePoint. So it's just, 1 share a day effectively as it's below my average. And so I chose 203. Let's see, the high over here was 206. I think 203 was actually, let's see, the close, I believe, on Thursday, the 25th, was 203. And so that's kind of why I had that order placed at 203. And, I just carried it over into this week because it does, correspond approximately with 206, and then the 382 here, right around 199.7, or, $2 a share. So kind of right in between those levels. So I could see that being a nice dip buying level. But if on Monday it doesn't come down to 203, I'll just pick up another share at, whatever the closing price is, just to continue to get my average down as long as it's below my average. But if not, somebody in the comments suggested that they thought this was going up to 250 a share. And so, I could see that happening, but I could also see that this being a topping signal around some resistance, and that we do pull back, and that we do pull back lower to 186. And also should note, I guess, let's see, the low from Friday, the day before I did my last, weekly trading plan, the low is 186. We had retested that. So maybe we do see a pullback to $2, putting in higher lows, and then we eventually start to break out maybe over or around the monthly contracts for August. And so, I don't think it's going up to 250, but if it is, that's above my average. And, I don't think it is going to be getting up there, but I did sell some covered calls with that strike price. And so here from last week, I sold a number of them with either $2.50 or $3 strikes. Some of them, closed on, so I got 3 contracts here for July. I don't know how small that is. I hope it's not too small for you guys. Maybe I'll zoom in a little bit. And, it's a little bit pixelated. But yeah, so for these covered calls, hopefully this is better to read. But so the 250 strike that expired last Friday, that strike was 250. We didn't close above that. So, I got my shares back and I was able to make $3 from those calls. And then these other ones are, with expirations coming up either this coming Friday, the 2nd, or the following Friday on the 9th. And so those strikes are ranging between $2.50 and $3 a share. What I plan on placing, that's why it's red. I have not placed these yet for either let's see, I do have one placed for the 2nd, $2.50, and that's just because I get a premium of $4 for that, and because I don't think that it's going to be closing at or above $2.50 this coming Friday. But if it does, then I take a little bit of a profit, and then I have more cash on the side to be able to buy a pullback if there is some. But if not, then I'm going to be riding shares that I hold up to either $3 for this Friday or the following Friday, $3 or $3.50. Happy to take profit then. And, it really comes down to, do I want to be in the business of holding stock, or do I want to, or shares, or do I want to be in the business of making money? And this kind of forces me to be taking some profits. While they could be much larger, I'm sure, I'm at least collecting this premium. And so I will be placing these orders during pre-market on Monday. And, I think that I'll be keeping that premium as well as keeping my shares. But if not, that's fine. It's no big deal. And so, ChargePoint, I did go over that. The next one on the list here is Chewy. So I'll flip over to the Chewy chart to go over that. So here, this is the Chewy chart, ticker symbol CHWY. I did pick up a share last week as we did get a dip below $25 a share. And so the order that I had for last week for Chewy was at $24.94. And that was really just to get my average down to $24.95. Now I have 2 shares at that average. So that order filled. I kind of regret not, thinking that price might be coming down to like $24. That's the 618 here from this retracement that I did going from this low that was hit on April 25th, a low of 1469 up to that high hit on June 27th. And so that 618, 2401, I'm kind of thankful I didn't place an order there, because the low that we saw on the 24th, so it was Wednesday, was 2402, and then the low on Thursday was 2402. So 2401 would not have been filled. So that's really why it's going to be placing orders, in 5-cent increments, above these levels. And so like 2405 would seem like a good level to pick up another share. And so let's see what the price is that I have for that next dip buy. 2405. Maybe we dip to it, maybe we don't. And I was thinking, oh man, with this dip 2494, I should have, I'm pushing the wrong button here. I should have done that at, I guess I omitted his average. I deleted them from the chart. Oh no, that's GameStop. I'm thinking about GameStop. Never mind, I'll come back to that. I was thinking 2341, that's Roaring Kitty's average, but that, was not hit this week. And that's also a different stock, that is GameStop. But yeah, so with Chewy, I'll pick up another share at 2405. If we don't see a pullback to that level, then I'm just going to chill. But I guess I could see that since we did test that, maybe we start to test 2323, the 65% retracement. But I do feel like we are making, higher lows. And, I think that getting down to 23 would kind of be violating that a little bit, with the lows over here being, let's see, on the 2nd of July, the low was 2362. See, I'd not like to see that 65% level tested again, but maybe that's, spring before we see the stock price launch. So, I'm just going to be waiting for 24.05. And if that doesn't fill, I'm just chilling holding 2 shares. Chewy is one that I'm excited about. I'm excited about the movement, whether that's Roaring Kitty or just the business and stuff. But I just don't want to get too aggressive with it. So I'm just chilling with the 2 shares that I have right around the average price. And so, if it dips lower, I'm happy to pick up another share. If it doesn't, I'm happy to just hold my shares. And then I'd probably trim or exit, if we see another violent move to the upside. Or maybe, I'd sell 1 share if it, 2X's, who knows? And then I'd, be holding 1 share, playing with house money. So I think that'd be great. And, so the next one on the list here is Fisker. I'm not going to go over that because that's, basically I'm not planning on doing anything with that. And so the next one on the list is going to be GameStop. So GameStop here, looking at ticker symbol GME. What are my thoughts on this one for the coming week? And what did I do last week regarding the position that I have? And so I did have an order placed at $24 a share for last week. That did get filled. Again, just 1 share, nothing too exciting. What I plan on for this coming week is $23.69, picking up 1 share there. It's in yellow. I already have that order placed. And the reason why I chose $23.69, you can kind of guess, 69, just having fun with that number. And, with the low on Thursday being $23.36, dipping below Roaring Kitty's average at $23.41. I think that we may not be testing those lows again, but maybe, it does look like this is an inverted hammer candle, so we might be seeing a pullback. And with that, I could see a dip, but I don't think it would get down to $23.36. I don't think it would get down to $23.41, but maybe it gets down to $23.69, and then I just add another share there. Given that, it's not much higher than $24 a share right now, I could see a little bit of a pullback there and, then adding to my position. Or maybe it does just pull back to the 786 here, which is at $23.91. You can see that here. And, maybe that's the dip buy. Maybe we start to see some violent moves to the upside. And, maybe AMC is a catalyst for GameStop. Maybe they switch roles with the AMC earnings coming out and stuff like that. Bullish news around Deadpool and Wolverine. So maybe that's reflected in GameStop. But, maybe some bullish news comes out about GameStop and that triggers what's going on with AMC. So who knows? But yeah, I see $23.69 as being a good dip buying level for this one. And if that doesn't get filled, I'll just reevaluate next week. So we'll have to wait and see. And let's see, the next one on the list here, is going to be Hycroft Mining. And this one's kind of interesting because, I don't have, my position's not divisible by 100 shares. That's why I'd be adding 83 shares at a price of $236. And I should note that $236 was not filled last week. I did pick up some more shares, just, one, basically every day that it closed below my average. But here is the Hycroft mining charts, a ticker symbol HYMC. And we can see here that my price was $236, corresponding with the 786 here. I'm just going to patiently wait for that. My thesis with that is really just based on being stubborn. I will continue to get my average down on a daily basis, adding 1 share to it, as long as it's below my average. But I'm just going to wait until 236 to then get my position up to be divisible by 100 shares, which would be 100 shares. And then after that, I'd start looking into some cash secured puts. But this is really just the same kind of thesis. If we do see some violent moves to the upside, I will probably trim my position at $3.14. And by trim, I probably mean exit because, while I'm excited about Hycroft and AMC's involvement in it, I feel like it's just kind of a dilution of, my bullishness on AMC. And so I, kind of a little bit of a distraction. And so, I'd just take profits at 314 because, it's a 50% retracement from here to get some consolidation above it. So I think, price would probably get up to around 350. So I'd probably be selling myself short a little bit there. But, also just liking the number 3.14 pi, having fun with it. And then I could focus those funds, which, if I do have 100 shares at that point, that's $314, could focus that on other positions. So I'm thinking I'd be doing that, but maybe actually looking at the chart, I will probably, I haven't done it yet, but I will adjust that exit. Actually, I'm going to do it now. I do my trades on my phone, but I'm going to adjust my exit for Hycroft Mining to be from this price to, yeah, and you'll be able to hear the beep, I believe, when I adjust my sell order from 314 to 350. And so that does correspond with this 382 here and this consolidation up here. I think we could see a wick up to that level. And so, yep. And let's see. I think you guys should be able to hear beep in a second. Maybe not. Wait. I guess I didn't. Sorry, 1 second. I guess I didn't. I got to modify it. All right, so now. Oh, I don't know if you heard that beep, but there's a little beep. It means I adjusted my position. Yeah, because I think that, my bump into resistance here, and then that's making, that difference between 314 up to 350. So that is what I plan on doing with that one, just because I can't be, focusing on all these stocks. And so that's just a way for me to trim out of that. But yeah, adding more heavily around 236. I'm excited about that one. And then next on the list is going to be Luminar Technologies, ticker symbol LAZR. This is one that, I don't have as many shares as I'd like to have. My share position is not divisible by 100. So rather than selling a cash secured put, which I've done before with Luminar, I'd like to do with price below $2 a share. But I feel that price could be coming down to the 786 here. That's at 148, so right around 150. So my plan with Luminar, as far as the shares go, is, I had this order placed at 150. That did not get filled as it is in white. Moving over to this week, still at, 150. And, every day that price closes below my average but above 150, I'll buy an additional share, and then from that I'll trim from this number, so then I get my position to be divisible by 100, and then I'll add to it by selling cash secured puts. But for this week, the one that I'm going to be doing that with is Plug Power, as you can see. So I'll go over that. It should be a nice example. But then for Luminar, let's see, covered calls that I've sold last week, those were at strikes between $2.50 and $3. And, I made, let's see, that's about $6 from selling those covered calls. Some of them do go out to, a couple Fridays from now, August 9th. So, we'll be holding that for a little while. But for this week, I did, or for last week on the 26th, I did have one that expired out of the money. So I get those shares back. And then I guess I, had an additional 100 shares. So what I'm doing with Luminar, kind of interesting for this one, I will be selling a covered call with a 250 strike for August 9th. That's above my average. And, not notably above my average, but, really just a trim as it goes up. It forces me emotion free out of that to trim that position. And then I can add more comfortably if it does pull back. And then I just, having fun with this. 450, I don't think the stock price is going to be at 450 by August 16th. But, it's a nice way for me to pick up $1. And, then, I'm effectively just locked into those shares. But if it closes above 450, then, I take some nice profit there. So I'd be happy with that. So that's my plan with Luminar. So not too exciting for the, couple weeks ahead. But, making a couple dollars there. So that will be nice. And then, in the prior week, that went up to, around $43, making money on covered calls. We'll see what that ends up being for this coming week. I imagine, again, around $40, but we'll have to see. As I am getting less aggressive with the AMC covered calls. So, I might be closer to $30 for this coming week, but that's money, so happy to take it. And and that is really all just based on the thesis that I think this is going to be coming down to $1.50, and once it does, then I'll fill that order, and then I'd want to, start selling some cash secured puts, either to pick up more shares or just to capitalize on premium. And then the next one on the list, it's actually not on the list, is Maxeon Solar. I did pick up 100 shares at an average price of 24 cents. Not risking a lot of money there, but I do plan on exiting my position, by the end of the month. So I've just got 3 days left for this to squeeze, and I might be taking a loss of about $3 or $4. That's fine. I just was expecting this to go up to test the top of this channel, potentially, or maybe the middle of it, be making some money there, but that just hasn't happened yet. And maybe it does start to squeeze in August, but my thesis was squeeze up by the end of the month. That hasn't happened yet. And so if it doesn't happen, I'm just going to take the loss and move on. Not a big deal. And then the one after Maxeon Solar is going to be NIO, ticker symbol NIO. This is one that, I'm happy I was patient with it. And, now the share position size that I have is divisible by 100. I believe I actually just have 100 shares. And so with me now having 100 shares, I did attempt to sell a covered call last week, did not get filled. The strike 550, as that is above my average. And so because that wasn't filled, that was actually initially for an expiration of July 26th. That wasn't filled, so then I adjusted it on Friday with an expiration of August 2nd. And so hopefully that can fill this week. And my average is below 550. I believe it's around 515. So I make a little bit of money on that. Not only, a buck from the premium, but then whatever that difference is from my average up to 550. And so, we'll see. That forces me at this point out of my position. But, what are some levels that I could see NIO coming down to that would be a buy the dip level? And so from last week, the buy the dip level that I saw was 435. And to get my position size up to 100 shares, I bought 22 shares at 435. It's around $100 right there. Again, not a big buy, but I'm trying to do this slowly, carefully, calculated. And so looking at the NIO chart here, the low for the week that we saw was, 424. So a little bit below that dip buy level that I identified, which is based on the 786 here at around 433.3. 435 just being a little bit above that, rounding that to the nearest nickel. And so if price does go lower, the next dip buying level I could see is, really this low of 414. The 52-week low is 361, so it could break lower than that. But I would like to see it hold 414. But given that that's, close to 415 and that also being close to another number that's fun, I have my buy level at 420. But as you can see, I don't plan to buy any shares if it does get to that, basically just because I need to add some cash into my portfolio to do that. And I didn't get paid last Friday, I get paid this coming Friday. And so it's probably going to be kind of a tame week as far as that goes. And I don't, if it does pull back to 420, then it'd put it on my radar. Do I want to do cash secured put or just buy as many shares as I can, with that strike or with that price, $4.20, getting my average down more aggressively. But yeah, that's just a level I'm going to keep my eye on. And, I'm just going to hope that, it launches up to, $5 or more. And then, I could start making some money on selling covered calls on a weekly basis and eventually, exit the position via that covered call, I should say, because I only have 100 shares. But yeah, I think this was a nice one of me, a nice example of me waiting for my level to be hit. And, maybe it goes lower and, I'll reevaluate then. But I do think 420 would be the next dip buying level. But I'm hoping that, I've got this downtrend mark there. I don't know how significant that is. Does go back in time notably, going back to, I believe, 2022. Is that right? Yep. October 2022. And so, we're trading now. We closed the week above that level. So maybe it's finding support here. Maybe it has a bottom. And then I can just incrementally, as the weeks go on, move the strike price for those covered calls up. So 550 this week. And the following week, if it closes below 550 this coming Friday, then move that strike up to 6 or, whatever, to be able to make a little bit of money on that premium and not have to exit my position. And then I can just kind of exit, as I evaluate moving forward. So that is my plan with NEO. And the next one on the list is Palantir. Made a video on this, and I'm actually going to take a sip of water real quick. But yeah, Palantir, ticker symbol PLTR, made a video on this, pulling back to, I was thinking, $27, hit a low of 26.63, wicked below this purple uptrend, and then closed above not only that purple uptrend, not only the 382 here, my buy was at 26.20. Yeah, my initial buy was at 27, and then I added to another share, so nothing crazy at 26.20. Could have had it at 26. The low, like I said, was 25. I don't know if I said it, 25.42, but did wick below these levels, almost retested this red uptrend. And yeah, so I mean, now we're above those levels, also above this orange downtrend based on these pivot points. So yeah, I mean, I think that the chart's looking pretty good, but I do think it could be kind of like stair-stepping its way down. And so what is my next buy level for Palantir? You could probably see it based on the chart. That is going to be the 50% retracement at 25.08. Let's see what I have in the buy order placed here. Yeah, 25.08. Maybe I'd actually want to adjust that to 25.10 just to in case it doesn't come exactly down to that level. But considering that's above $25, just by kind of it's an even number, but an odd number, not round dollar number, 8 cents. I feel like that's a fine dip buying level. So I'm not going to adjust that to 25.10, just going to leave it at 25.8. If it does pull back to that, I'll add another share, get my average down very, passively, very unemotionally. Building a Palantir position, I now have 2 shares. Average price is going to be, let's see, the average between 26.20 and 27. So that's 26.60, I believe. And so, I'm happy with that. Current price is above my average, so looking good there. If it does dip to 25.08, I'll add another share. If it doesn't, I'm just going to hold on to my shares. I'm not going to plan on trimming or anything like that, just holding them. I'll accumulate as many shares as I can, and every week if it does dip lower, that's great. If it doesn't, that's great too. I'm happy either way. Not being too aggressive with Palantir. And yeah, since I only have 2 shares, nothing too crazy with it. Like I can't be selling covered calls or anything like that. But I will be looking for, a dip buy at 25.08. So nothing too exciting there, but there is, some excitement around the stock. And so, I'm excited about it, up or down. And then the next one on the list, this is one that I'm pretty excited about, Plug Power. I now have 200 shares, and, so that is based on the level that I was waiting for getting hit. And so if I look over at last week, I got 96 shares at an average price of $24.45. That was my limit buy order, $24.45. Over the past week, we saw a low of $2.31. So it did break below my level, but currently now trading above it. 786 was at $2.45.2. So, that's the level that I placed the buy at, $2.45. And, yeah, so I'm glad I picked up those shares, and now that I have 200 shares, I can do covered calls, multiple covered calls every week. And so my strategy with Plug, my average is below $3 a share. I believe it's around like 270 something. So I wouldn't be making a lot of money if it closed on Friday the 2nd at $3 a share, but this is just a nice way to pick up a little bit of premium, $2 total with the $3 and $3.50 strike. We had a hard time. We didn't get up to $3.50 on this move up, and so I could see it having some struggles, not getting up to $3 a share by the end of this week. If it does, though, then it forces me to trim my position. I take a little bit of profit, nothing too crazy, but that just gives me more maneuverability, so I do like that. But since I now have a position that's divisible by 100 shares, this is the one that I'm going to hopefully add to based on a cash secured put. And so the cash secured put level that I have is, not, from the prior week, we saw it at 245. Now I've adjusted that buy level to be at 225. And so how am I going to pick up 100 shares at an average price of $225 using a cash secured put? So I think that this is, a pretty cool lesson. I really like cash secured puts. And so my strategy with that is actually going to be to sell a cash secured put with a strike of $2.50. But my limit would then put my average at $2.25. So if we look over at the options table here, looking at calls, I'm going to flip over to puts only, and we can see that the $2.50 strike, this is the sell order, that premium is 13 cents. I don't know how well you can see it, but it does say 13 cents. So if I were to sell a cash secured put, I'd have to have $250 on the side to pick up 100 shares, but then I'd get this premium of 13 cents, and that would then put my average buy price at not $2.50, but $2.37. And so that is not the average buy that I would want. I would want my average buy to be $2.25. And so the way that I would accomplish that, because, I don't think price is going to be going down to $2 a share. Premium is pretty minuscule for that strike. And so, it's just 1 cent, it's $1. And so what I plan on doing is placing a limit sell order with a premium at 25 cents. So then that 25 cents would then subtract from the strike price. That would then put my average at $2.25. And so that's what I plan on doing. I haven't placed the order yet. I do need to add a little bit to my account in order to have enough cash on the side to do that. And so the reason why I'm interested in $2.25, I'm just going to flip over to the chart here, not the table. The reason for that is because we saw the low over here of $2.21. It would be nice to see it pull back to around that level, but not go much lower than it or not go lower than it at all. And so I could see $2.25 as being a nice level to dip by. And if price does close on Friday below $2.25, I'd then pick up that $25 from that premium, 25 cents times 100. Then I'd pick up 100 shares at an average of $2.50. That would then effectively put that average at $2.25. And but that's only if price closes below $2.50. And so I feel like that could be a very nice way to more aggressively buy the dip with just one order, and that would equate to 100 shares at $2.25. If it does continue lower, then I would just reevaluate. If it does bounce and then closes above $2.50, right around the current price, then, I'd pick up $25 premium, and, I'd still have the 100 shares that I have. Unless it's closing above $2.50, then, actually I'd be trimming that position. So maybe that's a little bit of a gamble, but that is, kind of my strategy to, have cash on the side by doing this cash secured put. And if the order closes in the money, or if the order fills, then, I pick up 100 shares at $2.25. If it doesn't fill, I just have cash set on the side. Or if it does fill but then close out of the money, then I make $25. So I feel like it's a win-win-win type of situation. And so that's what I plan on doing plug for this coming week. And that's the only cash secured put that I plan on doing, just because, I didn't get paid between last week and this week. And so, my funds are kind of limited. And, that's just what I plan on doing. But I'm excited about that one. And I think that with our trades, we need to be excited about them. And so I find this plug power, overall the stock, overall the chart, and, cash secured puts just to be an exciting way to build more position, a larger position size. But, I could definitely see that the bottom being in around the 786. And maybe I do get forced out of 100 shares, next week. And I'm fine with that. And actually, thinking about this plug power, that's, I was thinking Luminar 250 plug power, $3 strike there, $3.50 strike for this coming week. So, that's, fine. I guess, my average, like I said, is around $270. So I'd be making like $30 on this. So it's not too bad, plus that premium. So, I'd be happy with that. But now going back over to the charts, I'm going to look at the Rivian chart. This one, has been a little bit disappointing for me. The level that I had hoped to dip by at was, I believe, 1485. Let's just flip over to here. Now we can see that the dip by 14.85 Rivian for this week, I bumped it up to $15 a share. And so why did I do that? Because I don't necessarily think price is going to be coming down to this level. I do think it could, though, dip below, maybe just get a wick below, kind of an abrupt sell-off, but then a reclaim of the level here. That's around, yeah. So I don't know. I don't necessarily expect that to be filled, but just, trying to be patient and just thinking, $15 round number. Maybe it pulls down to that. If it doesn't fill this week, I would probably just say, screw it. I'll just pick up a share at like $16. Because, I'd like to, be a shareholder of Rivian, and currently I am not. Ooh, wait, actually, no. I am a shareholder of Rivian. This is, I guess an order did get filled. What was that price at? I think, oh yeah, sorry, I have one share at, I think, $16.35. I'm like, it's on my holding list, and I don't think I hold a position in it. I do. But that's just, I could see this breaking down. There is this gap here. So I just don't want to be too aggressive in adding to my position. I only have one share at 16.35, so not that exciting. But I'm excited that I have a share. And, I'm not emotional about it. I'm going to wait for the dip. $15. If that doesn't happen, then I'll reevaluate next week. And then I might bump it up. Maybe I just bump it up 15 cents like I did, from 14.85 to 15. So we're just going to have to wait and see. And but just not being too aggressive with it. But I could see this being a bull flag. We do have earnings coming up on the 6th. So that's not this coming week, but the week after. And, I could see there being some violent moves to the upside following that. But I could also see a violent pullback like to this purple downtrend that I have drawn there. And that also corresponding with, this, inverse head and shoulders pattern that I'd gone over. We did get that measure move to the upside. So maybe we retrace to that scene of the crime. And then that would be a great dip buy around $12. And I would be able to do that more aggressively with very little emotion because I only have, a few shares at that point, average around $15 a share at that point. So that could be a very nice way to get the average down. But we'll have to see. I could definitely see this being a bull flag and this taking off higher. Gaps aren't always filled. I think Tesla is a great example of that. I think Palantir is a great example of that. So, good to not let the ones you love slip away. And, Rivian's one that I love. I like the stock. I like the company. I like the vehicles. And, so I at least have one share. So, again, not that exciting, but it's something. And, this is me getting, adjusting that thesis on a weekly basis if in case I am wrong. And then the next one on the list is Rocket Lab. This is one that I do hold a share of as well. Again, nothing too exciting. That average that I have is $5.16. So currently in the green, again, emotion free. My dip buy level for this is $5 a share. That did not adjust from last week. So Rocket Lab, $5 a share. This week, $5 a share still. And if it doesn't hit $5, then, I'd probably reevaluate that next week and adjust that higher like I did with Rivian. But for the time being, I'm just going to wait for that. I do feel like this could be a bull flag, big up move consolidation, but I do think that this could also be, a bear flag with this down move here in consolidation. And so that's why, I'm just going to be waiting for $5. We do have earnings coming up on the 8th. So that's, I believe, a couple Thursdays from now. Let's see. The next day is the 9th. Yeah, and that's a Friday. So yeah, the 8th, maybe we do see a pullback to retest this uptrend. And so, I'm going to be waiting for that, but I will be adding as it goes down, as I do have a very small position. It's very easy for me to add to it. And so, yeah, I'm excited to add more to Rocket Lab if it dips, but I'm also happy for it to break out and for me to be left behind with only holding one share. So, it is what it is. And then the next one on the list is SoFi. This one here, I believe I added to my position last week. I did also make a video on that. Yeah, this one hitting the dip precisely, nearly, exactly. Because we got a low of $7 a share during market hours, but pre-market actually went a little bit lower than that. Did a video on it, so I'd recommend checking that out if you have not seen it. But yeah, this one, dipped to there. You can see here that my order was filled. One more share at $7. Let's see. Looking at my phone where I do all of my trading, I do have 2 shares at an average price of $6.73. So, again, not too exciting. But, my average is below $7 a share. My average is below current price, so that is nice. And the next dip buying level that I see, which I'm sure bulls for SoFi will not be excited about, my dip buy level for SoFi is 656, kind of an odd number. I guess it's an even number, but odd that it's not round to the nearest 50 cents. And the reason for that is the 786 here at 656. I do have earnings coming up on Tuesday, the 30th. And so, what this looks like to me is this looks like a bull flag. So I would think that this could be breaking higher, but we do have these gaps to the downside. We do have a lot of consolidation here. I think that could be acting as support. And so, I am, cautiously trading SoFi. And so I would be happy to add another share at 656 if there's a negative response to earnings. I could see that maybe there being a negative response to earnings, given that, there being a lot of debt, whether it's credit card, all sorts of kinds of debt that people are in, and, delinquent payments. Also, one thing that I find pretty interesting, I don't get a lot of mail from SoFi, but I did get something from them regarding, not a credit card, but to be able to take out a loan via SoFi, so to effectively consolidate my debt. So I have some debt. I'm not too concerned about it, credit card debt. I have a plan with it, and it's all good. But my thought process when receiving this in the mail is that people are going to be starting to get delinquent payments on their credit cards. If they then take out a loan with an institute like SoFi, they could then consolidate that debt, maybe have a lower interest rate with SoFi. And, so I could see that being kind of an interesting play. And so maybe that's something that maybe not for this earnings, but maybe next earnings will look really good for SoFi. And so I could see that. But yeah, I could see, dip by 650 again, maybe going down to $6, those gap fills. So I'm being patient and waiting for that, but also acknowledging that I could be wrong. I've got 2 shares, so I'm happy with that, and I will hold for the long term, and I will cheer either way it goes. But yeah, I could just see it coming down to 650, and so 656 seems like a nice dip buying level for me, and so that is what I'm sticking to for this week, but I will definitely be reevaluating next week, so we'll have to see what my thought process is there. And so now with SoFi, the next one on the list, you can't see it because Ed's in the way. I might actually remove him for this. You can see the final tickers on that list here. So Tilray, ticker symbol TLRY, closed the week at 183, being up almost 3% on Friday. And it does look like it pulled back to, this uptrend that I have drawn here. So looking like there's some support there. But also, closing above the 50% retracement at 181. So, maybe the bottom is in. Maybe this is the bottom. But maybe it does pull back to around 170. And, I've always found 170 to be an appealing level for Tilray. And so let's flip over to, this table here where I have Tilray again at 170. That was not filled. I've been accumulating 1 share a day, getting not only my average down, but also getting my share count higher. And so with Tilray, that's 60 shares that I would then be purchasing at 170. And let's see, I keep flipping over to the wrong app. So looking here at Webull, 183, maybe we get a dip buy opportunity at 170, and maybe we don't. I'm just going to be patient for it, and then to get my total number of shares up to 100 in this case, or really just to be divisible by 100 shares, that would be adding 60 shares at 170, and that's about a $102 buy. So I'm cool with that. I'm fine with that. Nothing emotional about it. And yeah, so that's what I'm thinking about with Tilray. I'm hoping that this does pull back to that 786, as we actually haven't seen a retest of the 786 from this retracement going from the low here from June 25th up to that high on July 17th. So yeah, that's what I'm waiting for. I'm being patient with it, but still getting my average down as I wait. It does look like they report earnings on Monday, the 29th. So I suspect we'll see some volatility around that, the cannabis stock sector in general. And so that could be, really appealing. Maybe dip buys around there if it pulls back, just around some volatility. And so maybe that order gets filled and, I'll be happy, and then I'll be able to sell a covered call, and then I'll start looking into, cash secured puts for Tilray. But then the next one on the list is actually not in my holding position. That is actually Tesla at 185. And this for me is really just like I've placed a limit buy order. This is the limit column, limit buy for Tesla at that price. And that's really just, I'm setting $185 on the side. It's going to be tough, because I don't think it's going to happen so quick if it does pull back to 185. But that's really just, I'm keeping $185 on the side of my account, just, as a little bit of a buffer. And if Tesla does pull back, I think it's going to be a great dip buying opportunity. And so I believe it's in the request list. And so if I look at the Tesla chart, pulling back to 185, and this also goes back to that short that I shared from Gareth Soloway's channel, Verified Investing. He was talking about these levels over here. And so, I feel like there's a lot of weakness here, and that I might continue to bleed, just like American Airlines continued to bleed after the gap down. I feel like Tesla could bleed and maybe find a dip buy over the course of the next month around 185. And so that's what I'm looking forward to, and that would just be like I buy a share and I forget about it. If it continues to bleed, then maybe I'd add another share at 167 or 145, maybe 150. But I would just be chilling with that share at 185, and if it doesn't get filled, that's also, fine with me too. But I'm just going to be patient with this one. Maybe if price does come down to around 190, maybe I'd say, screw it, I'm just going to bump that up to 190. But really, I think that this is going to be bleeding a little bit, and that's going to be presenting some great dip buying opportunities. And so from the 185 to 190 region, that's what I'm looking forward to. And I have that buy placed at 190. So, this is just a patience play, and I think that it will pay off. So I am looking forward to that. And then the next one after Tesla that is on the I hold list, and that is Unity Software, ticker symbol U. They have earnings coming up on the 8th, so that is again Thursday. And so maybe we see a pullback around that. And I, again, have a share size, I believe 15, let's see, check in 1569. So currently a little bit lower than my average of one share, so I'm not emotional about it. But my buy order, as it was last week, $15 did not get filled. This week coming up, Unity Software, $15. So, that is what I'm looking forward to, and I suspect we might see some volatility around earnings. Maybe that dip buy order gets filled. And if it blows past 15, I will just patiently wait, place the next buy order the following week. But I just feel like this, is such a clean, beautiful, clear thesis here. We're in the lower part of this red portion of the channel, and I think that it could be going up to the top of it. And so having an average at 1569, that's more than a 2x up to the top of that channel. And so that is my thesis. That's what I'm waiting for. That's what I'm looking for. I'm not being aggressive, emotional, anything, whether that's around earnings, whatnot. I'll just add another share at $15 a share. No big deal there. And then the next one on the list, I think this one gets a little bit more interesting as far as what I did last week, but again, I'm not being aggressive with Velo3D, ticker symbol VLD. For this one, let's see, I don't have a huge position. I have 33 shares, but my average price is $4.53.3. That kind of sucks that I'm holding the bag on this one. But I think one thing that's really nice about this, last week I placed a buy order at 275. What was the low for last week? On Monday it was 272, and then on Thursday hit a low of 275. So I very nicely called the bottom there. Who knows if it holds? Maybe we see it fade lower. And, it might be a while before I get, basically I want it to get up to around $5 a share. That's when I want to sell. my position, take a small profit, but take that risk off the table. I think this one's a pretty speculative stock, just given how it's performed. But, I haven't lost faith. I do think that I will be able to exit, making a little bit of money on it. And so my next buy order for this coming week, let's see, is 275 again. But like I did last week, that was filled on the first Monday, but every single day it was below my average. So I just, accumulate one more share each day based on the closing price. And so I'm just going to continue to do that again. If it doesn't close or doesn't hit 275 next week, I will still be stacking, assuming that it's below my average again, which is at around $4.50. And so this is one that, I'm really proud that I called that level. And, we're just going to have to wait and see. Still, the all-time low, 52-week low at least, is 271. And so we hit the low last week of 272. So still respecting that as the all-time low, or 52-week low. Let's see. Can I go back? Yeah, that was the all-time low for sure, 271. So we're right around all-time low. So I just don't want to get too aggressive. Just doing, casual buys. And I could see that, this being a gap fill here with that closing price on Thursday of 286. So maybe that's a great dip buy level rather than 275. But, either way, I'm just going to be probably adding one share a day. Nothing too exciting until I accumulate up to 100 shares, and then I'll probably sell cash secured puts. But this, again, doesn't have too interesting of options because it's only monthly, not weekly. And so, yeah, that is kind of my thesis for Velo 3D. And now looking at the chart, since I have gone to the bottom of my holding list, I have gone over natural gas, but now I will look at SOXS. And the ones remaining on the list are, this is short semiconductors and then short basically the stock market. I do have buy order or buy levels, but I don't have buy orders placed because my thesis is we probably won't see the top of the market or the top of semiconductors until like September, or at least my time horizon. I want to be waiting to be getting my averages down on those positions. And so I'm just going to switch over to my semiconductor list. And so looking at SOXS, my buy order or my buy level would be at 261. What do I have marked here? I think, 261, 2261. And this is SOXS. This is 3x leverage short semiconductors. That buy or that gap is at 2261. That was the close from July 23rd, 2261. And so my level, 2269, just, maybe that gap doesn't completely get filled. Just having fun with the numbers, 69 cents, having fun with it. And so, yeah, I think that it does look like we put in a bit of a topping signal here. If I do look over at SOXX, this is a semiconductor long. It does look like this is the bottom, just being kind of opposite of SOXS. SMH is also a semiconductor long ETF. Does look like we put in a bottom there, so we could be seeing a nice bounce. And the one I always kind of turn to is NVIDIA. We have seen a pretty nice, pullback here. And if I do a Fibonacci, retracement just from this low here, just being kind of approximate, coming up to that high there. That's approximate as well. It does look like, 108.25 did get a wick down to that. That's a 50% retracement. So we could get maybe a dead cat bounce. But I could see over the course of the next month, this pulling back to, right around $100 a share. And that would correspond with these kind of like double tops here around 95 and maybe even getting lower than that, right around 90. That being the 786. And so, yeah, I think that, the top is potentially in for semiconductors or NVIDIA, but I think we might see some bounces. And maybe the top is not in, and that's why, I want to wait to be more aggressively adding to my short position. And my average for this one is right around $35 a share. I think I have around, let's see, I can pull it up on my phone just so I give you the exact numbers that I have. And this is something that I very passively have been adding to over the course of the year. I have 17 shares at an average price of $34.43, so right around this 618 level here. We didn't get a bounce up to that, and that's part of the reason why I didn't, add a lot down here. I didn't feel that if we got a bounce, it would be getting up to my average. And so, really there's just kind of like a time cost to this. And so my dip buy level, would be down here, and that would probably just be to add one more share. And I probably will wait until September before I get really more aggressive in getting my average down with being short semiconductors. I do think that the reckoning is coming. I don't think it is here yet. And then the next ones on the list, SH is short the S&P 500. Sorry, the S&P 500. SPXU is, I believe, 3x leverage short the S&P 500, and then SQQQ is 3x leverage short the S&P 500. And so I'll flip over to my indexes list here to go over those. Just looking at the SPX first, does look like, we broke above this uptrend, which is based on, these pivot points here. It does look like we could be getting a bounce. We did pull back to this level that could be acting as support over the next week or two. Who knows? And so I could definitely see a bounce with this. And so that is why I would want to be waiting to add to my short positions. One of those being with the SH. My dip buy level here, I do have this gap marked here at 1127 based on the closing price from July 23rd. And so if I look at this SH 1130, just rounding that up to the nearest nickel, 1130, that would be my next dip buy level. And again, probably just adding one more share. If I look at my positions, that I have got on my phone, my average for SH, 26 shares at an average price of $12.59. And so again, this bounce didn't get up to there. And, that'd be getting up to like, really this level here. So pretty high up. We need to bounce a lot to get to that. So, I would really want to wait for a bounce. And, for basically when my time horizon could allow for me to go really heavy in it, and then wait for that level to be hit, get my average down, take some profits. But yeah, 1127 or 1130 is what I see for the SH as being a dip buy. For the SPXU, really just same kind of thesis, coming back to fill this gap from July 22nd, July 23rd. The close then was 27.60. That's where I've got that blue line marked there. And my dip buy level for that would be 27.69. Again, just having fun with it. Maybe the gap doesn't completely get filled, and that would just, again, be to add one more share, get my average down a little bit. And I think SPXU is one that I learned about kind of late, so I don't have a large position. I have 6 shares at an average price of $32.78. And so, didn't get up to my average here. The high was 30.11 on Thursday. But I do think that when we do get a pullback, I can more aggressively get this average down and then take some profits or maybe exit my position because, I have been too early as far as being short these. And so that's kind of my thesis with this one at 27.69. Add one more share or, and then maybe put it back on my radar to get more aggressive, get that average down, maybe have 12 shares with an average price around 30, and then I could, think about starting to make some money with it at some point if we do see the reckoning, which I suspect we will be seeing at some point, likely in 2025, but maybe around the election, maybe there's some geopolitical news that's announced that maybe it tops in for the market, who knows. And then the SQQQ last on the list, my dip buy level would be 818. And I should note that these levels too, were higher previously. Like so, taking a step back, SOXS was 1879. I then adjusted that to 2269. SH was 1104. I've adjusted that to 1130. SPXU was 2595. Adjusted that to 2769. And now with the SQQQ, my previous level was $7.46. Now I've moved it up to $8.18. And the reason for that, again, that being a gap fill here. And I should actually adjust that to $8.20. I'm going to do that on my phone, but I'll have to adjust it in my table since we're just looking at it. Actually, I don't have an order placed for any of these, so I can adjust that in the table, no problem. But yeah, I would say $8.20, corresponding with a gap fill there. Also corresponding with this 382 and this 1618 in gray from this these retracements with the 1618, and then the 382 is an extension. And that being right around $8.20. I could see that being a dip buy level, but we also have, these gaps to the downside further with the SQQQ as well as with the SPXU, you know, this gap coming down to like 26 bucks. And then this gap here with the SH coming down to around 11.4, you know, that level that I highlighted. So, you know, I see that there are, you know, dip buying opportunities with these. And yeah, so I mean, this is, you know, the table. Hopefully this was helpful in how I've gone over that. I think that we are going to be seeing some stocks taking off next week. Namely, I think that AMC is going to have a pretty, you know, a bottleneck that I was talking about. I think that we're going to see that maybe not next week, over the course of the next month. But yeah, hopefully this was helpful for you guys since you are members. I know that you subscribe, but once I release this to everyone, if you're not a subscriber, if you're not a member, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thank you so much for watching, and sorry this was a day late, but hopefully it's just as valuable as it would have been if I released it yesterday. And so I hope you guys have a great week trading, and I'll see you in tonight's live stream. Take care, you guys.